Thanks for tuning in, whether you're watching this live or whether you're watching this on playback over the next couple of days. Thanks for listening in to our Tuesday Live Property Planning. Now, tonight, I'm just going to go through some negotiating techniques. So for me, negotiating is an everyday thing. But realistically, everyone's negotiating every single day of their life, whether it's with your kids or whether it's with your boss or whether it's with your partner. Negotiating becomes part of it. So what I wanted to share with you guys was how I go about negotiating with one, banks, and two, just some ideas on property negotiation, depending on what level of investor you are and depending on what you're trying to negotiate and purchase. So guys, I'm going to get stuck into it today. So like normal, if you have any questions, pop them in the comments. I want to see some questions. You guys are really quiet sometimes because I think it's a bit early. I do this live at 7:30, but unfortunately I'm not going to do it any later. But pop in the questions. If you have anything, reach out. We want to make sure everyone has enough information for themselves to get ahead financially. So, and also, of course, just pop that in the link there. If you do want to have a quick 15-minute chat with me, I do probably 10 a week. I've only got limited spots for them. I don't have them open all day, every day. Just hit that link in there and you can book directly into my calendar. I'll give you a quick call and just go through what you're trying to achieve. And yes, if I can give you any direction from that point forward. So, all right, so let's hook in from here. All right, so let's start with the banks. Now, the first thing I'm going to do is I'm going to share a quick slideshow with the banking side of things, because what I was able to do, Kiana in my office here, she was able to put together a little quick ready reckoner of what interest rates you should be having approximately. Like, these are just guides. These are definitely not predictions. These are definitely not exactly what you should have, because everyone's scenario is different. But I just wanted to show you what potential rates you could get, because if you're nowhere near these interest rates, you really need to make contact with your bank, broker, or our office. So let me just share my screen, guys. It's a quick one, this one. All right, so here we are. Okay, so I'm just going to, sorry, bear with me. Slideshow. All righty, so what we have here, guys, is, now there's I think I've got 6 or 7 different slides here. Each one is different on the basis of, depends on what you're after. So I've got owner-occupied loans, investment loans, and I've got total borrowings, all these sort of different structures. And that's why you can't go off these as a definite figure for yourself, okay? So, but I'm going to give you a bit of a guide, because what I've noticed recently, some people have some old loans and they need to change that, whether it's renegotiate with your existing lender or change banks altogether, because 1% can make a big difference if you have a portfolio when you've got over $1 million in debt to that bank. So every 1% for every $1 million is about $10,000. So we want to make sure we keep on top of that. So I'm going to start here with just simple owner-occupied loans. So when I talk about here, owner-occupied home loan, that's greater than $350,000 and with principal and interest repayments. What I'm talking about is your own home loan doesn't have to be over 350. It's about total borrowing. So your home loan might be 100, but you might have an investment loan of 260. So your total loans are over 350. So you're eligible for these sort of rates only on your owner occupied loan though, okay? So the top, I've always like to do the big 4 and non-banks. So I've taken 2 from each. So the 2 sort of on the lower scale with non-banks is Resimac, which is 2.39%, which is quite cheap. That's quite ridiculous. And Adelaide Bank, they're also at 2.39%. That's for an owner-occupied home loan. And we've got here St. George Bank at 2.64 and Commonwealth Bank at 2.7. So there would be a couple of banks in between that, but I just wanted to sort of narrow down to 2 non-bank lenders and 2 actual banks itself. So if you've got a home loan, your total borrowings with your bank is over 350, they're the sort of rate you should be looking at. So, and I'm the first one to say, Resimac might not be the bank for you. St. George could be the bank that's going to help you build your portfolio. So it's okay to pay a little bit more as long as that bank's going to come to the party and help you do better in your lifestyle. Okay, the next one, we're still here on owner-occupied loans. Now, realistically, once you buy 1 investment property or 2 investment properties, your total borrowings goes above $1 million pretty easily. So this here is $1 million of borrowings as total, and principal and interest. So the rates haven't changed too much with Adelaide Bank and Reserve Bank. They're both the same at 2.39, but you'll see there the bigger banks do come down a tiny bit more as your borrowings get higher, of course. The bigger banks do negotiate, where normally your non-bank lenders have a pretty, because their rates are quite sharp, you don't need that. So the biggest thing you've got to worry about is, do you need a branch access? Do you need a really good internet banking with high transfers? So that makes a difference to what bank you should be with, right? It's not just as simple as you should be with Adelaide Bank. It's not that simple. So the next one here we've got is an investment loan. So quickly, owner occupied, if you're borrowing over 350, realistically, you should be looking at about 2.39 for a non-bank and 2.6 to 2.7 for a big bank. Investment loans, when your borrowings are above 500. Now, this is an interest-only loan and also a loan-to-value ratio under 80%. If you go over 80%, you can sometimes kick in a bit more of an interest rate. So an investment loan here, Adelaide Bank and Suncorp, they're the most, we think, are the better sort of lenders with the non-banks. Now, it's definitely not 100%, like I mentioned before. At 2.99, that's a good, cheap variable rate for an investment property. And St. George and Westpac there, it's quite funny. They're both the same bloody bank, but they just got different ways of getting pricings. Because what we do as in our home loan department, we go out and make sure everyone is a competitive rate when they sign up with us, and yeah, just do what we call a pricing discount. So the St. George rate and the Westpac rate, or realistically any of the big bank rates, I'll sort of show you here. They're not comparison rates; they're just the straight out rates. They are negotiated, so they're not what we call a carded rate. We've put a pricing discount in for these rates here, and that can vary each week or each day depending on how much market share the banks are after. Okay, so 3.29, 3.24, that's an investment loan above 500, and that's, of course, it's interest only repayments. Here we've got investment loans above $1 million. So as I said, 2 properties, it's not hard to get to that $1 million mark. Interest only, we're still at 2.99 again with Adelaide Bank and Suncorp, but the NAB is actually coming at 3.2 and St. George is coming at 3.24. And just to remember, guys, these are all variable interest rates. None of these are fixed. Fixed rates, for an investment, we're getting them as low as in the low 2% for 3 years, and your mid to high 2% for 5 years. So it's quite ridiculous when it comes to fixed rates. Okay, the next one, investment loan, which is 500,000 and above, but that is for a principal and interest investment loan, so not interest only. The banks will give you a lower interest rate if you pay principal and interest. I don't very often recommend to pay principal and interest. Accountants don't normally recommend to pay principal and interest. But just in case you are paying principal and interest on one of your investment properties, these are the sort of rates you should be looking at there. But again, it's total borrowings above 500, 2.64 through to 3.09. And you'll see there, especially with the big banks, they come down a fair bit when you pay principal and interest. And of course, this last one here, there's 2 risk factors. You've got your principal and interest, which is a lower risk factor, and also under 70% loan to value ratio. So that means you have more than 30% equity across your entire portfolio. You can get a principal and interest rate at 2.54, which is a bit ridiculous when you think about it, or 3.04, 3.07 with a couple of the big banks. Now, guys, that could all change tomorrow. I will be honest with you, but I just wanted to give you a guide. So if you're paying high 3% for an investment property or high 2% for an owner-occupied loan, and you've got more than $300,000 on your internet banking owing to the bank, you really need to relook at it by contacting your current bank or chatting to our office. So I just wanted to quickly do a quick summary on that. But let's talk about how do we negotiate with the banks. So first thing you've got to do is a bank will only negotiate with you if you put together a comparable evidence of another lender. Now, what the biggest thing is though, a lot of people don't realize that the banks will only negotiate on apples to apples, not apples and oranges. So a big bank where they've got branch access, high security internet banking, branches and ATMs literally everywhere will not negotiate on the same playing field as a non-bank lender who doesn't have all those other facilities. Now, sure, this non-bank lender at say 3% and you're at 4%, your big bank will come down close to that 3%, but they won't match it at 3%, purely because it's not the same bank, it's not offering the same services. So if you're with a big bank, you have to realize the big banks come with the benefits of ATM access, branches, etc. Normally, they've got a more secure internet banking as well. But what they have, of course, your non-bank lender doesn't have. So the bank won't negotiate like that either. So just keep that in mind. It's apples to apples. But of course, the best thing to do is to call the bank. First thing, call the bank and just ask, is this the best rate I can get? Very often we see people that the bank has said, yes, that's all they'll do. So when we look at it, we're like, no, it's not. We can do a lot better than that. Even sometimes with the same bank, which sounds so stupid, but that's what the telephone staff are there to try and keep your interest rate as high as possible, or the branch staff are as well. But the best way to start negotiating that is what we do is we either get you to call the bank or walk into the branch and just ask for what they call a discharge authority form. So what that basically is, it means you're going to leave. Now, I have said this to many people before. Say, for example, I don't mean to pick a bank, but let's pick ANZ, right? You go into ANZ at, say, your local shopping centre and you say, I want a discharge form. How do I go about that? If the person is untrained on the other side of that counter, they're going to let you walk out with that discharge form. But if it's an old school, well-trained ANZ teller or staff member, they're going to ask you, what do you need it for? Why are you leaving us? And if you just mention, because I want to get a lower rate, normally they will try and get you a lower rate there and then, or get someone to contact you about getting a lower rate. So negotiating with banks is all about having evidence of another bank of what you want to go in there and negotiate with. And in a way, it's a softly way of threatening that lender that you're going to leave that bank. So best thing is go into the branch, give them a call, whichever way you want to do it, ask for a discharge form. If they do not, if they do give you a discharge form and do not ask you why you want it, go into another branch, give them a ring a couple of days later. Eventually, a well-trained staff member will pick you up and get you that better rate. Or chat to your broker who organised your loan in the beginning. They should be able to go back to the bank for you on your behalf and get a better rate for you as well. That's the biggest thing people don't realise. A mortgage broker, their job isn't just to source your loan and that's it. Their job is if you feel as if your rate's too high, their job is to go back to the bank and try and get lower, and or give you other options of other banks that you could go to get that lower rate. Now, if you're one of our clients and we haven't contacted you, but you're looking at these interest rates and saying, that doesn't look right, just email, call our office, we'll have a look at it and see what we can do. Of course, we've got several clients and we just want to make sure everyone is on that lower rate. We do try and call everyone, but sometimes people are busy and don't have time to look into that. So next question, where do you find your interest rate? On most internet banking sites, it's in the account summary or account management page. Just check what your interest rate is. Just be careful. If you are on a fixed rate, you can't really do much about it. If you wanted to change your fixed rate, what I normally suggest is to give the bank a quick call and just check what the break cost might be. Sometimes it's beneficial to break the loan and to get a different variable rate or another fixed rate for a longer term in this low interest rate environment. All right, guys. So, but just make sure, apples to apples, you can't say, I've seen an ad on TV, they said investment loans at 2.5%, but that's with an ABC no-name bank or credit union or whatever it might be. A big bank's not going to compete with that. All right, guys, they're not going to compete with that at all. Alrighty, so the next thing I want to chat about is negotiations on property. So let's go through that. This is the part I actually enjoy. I love negotiations. It's a good part there. Don't remember, guys, chuck in some questions if you got them. So first I'm going to start with price. Of course, price. When you're negotiating on a property, price is a big player, but it's not the only thing you have to negotiate. Because I'm focusing obviously purely on investment here. Owner occupied, you can still use some of these techniques, but I'm more for investment. So price, the biggest mistake I see people make is going in arrogantly, being quite rude, disrespectful to the real estate agent, and lowballing. There's nothing wrong with lowballing, but you just can't throw it out there. You need to get the real estate on your side first, have a good conversation with the real estate, and try and ask the questions of what is the vendor's motivation. The vendor's motivation could be they've been through a divorce, there could be a death in the family, there could be moving home, they could have bought elsewhere. So all that makes a big difference to how you're going to negotiate the property. So I'm not going to go into detail with price, because realistically, that's plain and simple. You try and negotiate the price down. But of course, we always try and start low and slowly work our way up. But as we work our way up, we start bringing in other forms of negotiation. So the next thing is taking ownership. So the settlement period. Now, I spoke about this last week. Most settlement periods are this is New South Wales again, sorry guys, I can't do every state at once, are 42 days. So say, for example, you're buying an investment property, and sometimes time is more valuable to you than what it is as far as price. So when it comes down to the price, as you're getting higher, your counter offers from that vendor are getting higher, I start to push out the period to take ownership. So they realize I'm a serious buyer, but I want control of this negotiation. Some real estate agents will not let you have control. Sometimes you need to walk away from properties. But I like to have control of the negotiations. And the way I do that is say, okay, I'll offer a bit more, but I'm not going to take ownership for 3 months or 2 months or 6 months on this property. And because we do a lot of land here or subdivisions or things like that, this works in our favor. So as your price comes up, you can push out your settlement period. A lot of people don't know that as well. Okay. Then on top of that, real estate agents won't like me for saying all these, by the way. They will hate the complex negotiations. They just want a quick sale and move on. But the next one you can go through is, okay, you want a higher price. I want to don't take ownership for longer. And on top of that, I actually want a smaller deposit. So most people, you'll pay a 10% deposit on exchange, whether that's by cash, bank guarantee, or deposit bond, but negotiate a smaller one. I have bought in my career several properties and exchanging contracts on $500. Sure, I'm still liable for 10% if I didn't purchase and I didn't commit to that property. But $500, it's quite funny. You can do that. It's very rare, to be honest with you. You normally have to have some sort of relationship with the person, but you can do that. That's no worries whatsoever. So with that, so your price goes up, extend out the period that you're going to take ownership, make the deposit smaller. Now, if it's a block of land, like a simple block of land, I don't think I've ever actually taken ownership on a simple block of land in that 42-day period. Most blocks of land I've purchased off the top of my head have been either off the plan, of course, which is an extended period. But if I bought a block of land ready to go, it's been normally 6 months before I take ownership. Now, the reason why I do that is that the biggest reason is I want to get into the planning. I want to get into the council. So if I say to this person, okay, you want 200, I want to pay 180. I'll give you 200, but I don't want to take ownership for 6 months. In that time, you're able to put your council plans together. And if you're with the right builder, they'll actually lodge the plans with council. And you'd hope that your plans were approved by council so you can start construction straight away. Now, of course, you will need a letter of direction from those people to give to the council, which is also giving you permission to lodge plans on their property for yourself. That's the main thing there. Most builders will know all about that, but a lot of people just take ownership on the land and just start paying interest straight away, where the longer the better. The biggest thing that we do here is we want to make sure plans are into council before you take ownership on the land. That's definitely a big one for us. Okay, now say for example, you want to renovate a property. So we go back, we're doing the negotiating on price, we're doing the negotiating on time. Now the biggest thing with renovations, if these clients are if the property's vacant, or if these clients are going to move and leave the property early, a big one I always negotiate is I want to get into that property, at least take measurements and do some planning and ordering. So when I get the keys, I can hook in and do some damage and then rebuild that property from the inside out. Now, ideally, I have got I suppose you could call it a friend at the moment. She and her husband have early access on their property because settlement was actually pushed back to late, and they've gone in, they've painted the entire house, they've done all the cleaning. I think they take ownership this Friday, and it's amazing. They've done most of their work before actually taking ownership on the property. But the biggest thing is they've been able to do the planning and ordering, because it's so frustrating. You get the keys, you start to go out and plan, and then you have to wait 4 weeks for the oven. You have to wait 3 weeks for the fridge, or whatever it might be. So you can't really move forward. You want to make sure you can hook in and really get stuck into it as well. One thing I forgot to mention, actually, I've got some notes on the board behind me here, is when you have a long settlement, and say, for example, they will not allow a small deposit, you can also do a step deposit. So a step deposit is where you might pay certain amounts each month to get to your 10% within a certain period. That definitely always happens. You can negotiate inclusions, of course. That's definitely one there. Hey, Leanne, how are you going? You can definitely negotiate inclusions and also exclusions. Now, a couple of exclusions that I have actually negotiated was to get rid of the garbage out of the yard, get rid of the old car, get rid of the old shed. I've negotiated that before, mainly because, especially with the old shed, I was concerned about asbestos, and I didn't want to have that problem for my removal process. So you can do exclusions as well. So you can exclude things out of the contract that you want removed, but of course you can include things as well. That's another one there as well. So the next one is, the biggest one is option contracts. Now, option contracts are a lot different to a land contract on the basis that basically you are presenting an offer to a client under an option, not under a New South Wales land contract. Now, these option contracts are relatively generic each state, and you can put whatever you want in an option contract. But I'm going to be honest with you, your everyday mum and dad will have no idea what you're talking about. And if you're not the one sitting across the table from them negotiating this option contract, the real estate agent will also probably have no idea, and it won't come together. But an option contract gives you that option to put your plans in the council. And especially if you have 12 months, say in New South Wales, you'll pay stamp duty. Even though you don't take ownership for 12 months, you're obligated to pay stamp duty after 3. So an option doesn't have stamp duty associated with it. So you're able to put your plans in the council, get them all approved, etc., and get it out of council before taking ownership, and not even have to pay stamp duty for that. And the biggest thing with that is a lot of options are subject to a development approval. So just say, for example, you bought a land under a New South Wales contract, you have to pay stamp duty in 3 months. When you go to take ownership, your development approval cannot get approved. You've paid stamp duty. You've got to go back and try and, if for example, it was subjected to the development approval, of course you can rescind your contract, but you've got to get your stamp duty back from the OSR, which is, it happens, but it's just a little bit of a painful process. So for the more complex deals, we always recommend option contracts because the best thing with that, with an option contract, is normally how the option is written is if it all goes pear-shaped, you can walk away. The only thing it's cost you is all the development and planning you put in place, and maybe some sort of deposit to the owner that you've done the option with. So guys, the biggest thing I wanted to get across to you tonight was negotiating is very complex. You can make it as complex as you want. Of course, people won't like it, but as long as it's a win-win situation for everyone involved, that is my philosophy. Every time I get out of bed every morning, each negotiated deal I do, I really want to make sure it's a win-win for every single person involved, because then everyone's happy and everyone wins. And therefore everyone's happy to negotiate on different terms and conditions of the contracts. All right, guys. Now, tonight's only a short one on the negotiating techniques, but the biggest thing I want to say to you guys is check your interest rate with your banks. Don't be an arrogant lowballer. It's just going to get people offside. And you really want the real estate agent or the vendors on your side, because you'll be able to work with them a lot better. All right, guys. So any questions for tonight so far? Any questions, guys? Now, Jess is going to whack that link in again for us in a minute. Well, she probably doesn't have to there. But whether you're watching this now or watching this later, reach out to us if you need any help. But guys, that's about it for tonight. But if you have any questions, yeah, reach out any time. But otherwise, negotiate. Be nice when you negotiate, but just be professional about it and just look at it from a win-win perspective. The biggest thing I always say, of course, is don't be arrogant. Chat to the real estate agent. Try and get as much out of the real estate agent of the vendor's motivation. Honestly, they probably shouldn't tell you, but a lot of them will. And when you do get a good real estate agent that does communicate and does help you put the deal together, sometimes they're good to keep up your sleeve for future negotiations. If you get a really bad real estate agent who tells you absolutely everything and negotiates the property right down low for you, sure, take the deal, but I wouldn't use them to sell the property again later. They're obviously not working on behalf of the vendor, which is what their job is, but take the property anyway, but just don't use them for resale down the track. All right, guys, thanks again. It's Wayne Jessup here, the Property Bloke, bringing you real property with real strategies to obtain those real results in the Australian property market. Guys, thanks again, and I look forward to seeing you again next week. Reach out anytime. Thanks again, guys.